Hey folks, my name's Jeffrey, and I'm going to give you an overview of how you can get started trading with the Emini futures, day trading. A lot of folks are out there are swing trading stocks, and maybe they're doing some investing, maybe they're attempting to day trade stocks as well. And the futures market really offers some unique advantages. So we're going to go ahead and cover those today real quick here. Now, I have to talk quickly because we got started a little bit late, but uh, we'll gradually slow down, and I'll be showing you some really cool examples and things. And one of the things here that we like to do in the Festival of Traders presentations is, give you something that you can take away right away and utilize with your own trading. And so part of the giveaway here in my presentation is basically the overview of how to get started. If you know nothing about the futures market, this is going to be your crash course on how to just approach the whole thing from the get-go, the different brokerages to work with, and the different strategies that we utilize, and some of the mechanics of how the futures differ from stocks. And then I am going to show you a couple tricks that trading tricks. If you're trading now and you're either swing trading or even taking investment positions or day trade, I'm going to show you a trick that you can utilize right away on your charts, and that will help you out as well. So let's get started. The futures market, we've got the equity markets, there's the option markets, there's the Forex. The futures market's based out of Chicago, and it basically breaks down into a small group of symbols. We got the ES, and that represents the S&P 500 futures. The NQ is the NASDAQ. The YM is the Dow, and the CL is oil. And we've got gold, and there's lots of different futures. But the main ones are probably the ES, NQ, YM, and then there's a lot of folks that trade oil. We trade in contracts instead of trading in shares. So right away, we have a little bit of advantage here, because one of the things with trading in stocks is you have to take into consideration the price of the stock, then maybe figure out what kind of ranges that stock is trading in, and do some computations on how many shares you're going to buy. And then you also have to do some percentage math to pick your targets, right? That's just the nature of the game with trading stocks. You're doing all that math there. With the futures market, what's really lovely about it is it just trades in contracts, and we trade in points and ticks versus percent. So we can pick with each of the symbols that move in different distances based on their markets. We can pick concrete point targets, and that's it, right? There's no math every time we pick a new symbol to trade. We also get the advantage where it's just as easy to short the market as it is to go long. So if you've never shorted the market and you've always had this long bias, which is a lot of traders do, a lot of stocks are not available to short. Sometimes shorting is extra tricky. You don't get the good fills. And there are issues where you can get knocked out of your short positions arbitrarily, just because they run out of short shares available, weird stuff like that. And so a lot of people don't short the equity markets. But the market goes down, as we've just seen, in a huge way sometimes, and a lot of profit can be made on the way down as well. So with the futures market, you'll get real used to shorting just as easy as you go long. And so it's a yin and yang thing where you can really take advantage of both directions that the market's going to move. Some days we get a strong trend day through the whole session. We go higher, like yesterday. Other days we're going lower. A lot of days we'll chop up and down or make a big V reversal, so we can actually profit on the way up in the morning, and if the market does a V reversal on the downside, we profit on the way down. So the futures market is very flexible. Again, with stocks, we're dealing with a lot of math, and it's not so easy to short. And so The options market's pretty complicated to get your head around. So that's not easy either. A lot more variables to deal with. The futures market is straight directional trading, and that's the great thing about it. Highly leveraged, straight directional trading. We jump on the trend where the direction of the price is going, and we pick our targets, trail our stop, that type of thing. So it's a great market to get in and learn to day trade because it's so flexible. You know, long, short, we're in, we got fixed targets, and there you go. The other thing, it's a 24-hour global trading market. Now, they actually shut it down to, you know, recalibrate or whatever they do, but it's down for maybe like 45 minutes, it's reopened, and so it's really a 23-hour market, but you can night trade or pre-market trade just as easy if there's volume, if there's momentum. And you know, the futures market, a lot of times when you wake up in the morning and you see that the markets are gapping way up and all the stocks are gapping way up, that's because the overnight future session ran that up. And if you want to trade during the night session, which our night session overlaps with the European session, and so that's where a lot of the volume comes from. It's not just people hanging out all night long in the United States. So the European session starting there, and so you can take advantage of that. And so as we get closer to the equity market open, you know, New York 9:30, we actually get an overlap. We get an overlap between the European market and the U.S. market. So there's a lot. That's where we get this intense movement first thing. For the first 2 hours, you can bet almost every day in the futures market. There's plenty action. As a matter of fact, that is another great thing about the futures market is you can really schedule it if you want to focus your firepower on that first 2 hours, and that you can be done for the day. All right. Many times, you know, futures traders are doing scalping and whatnot. We're done in the first hour. Right, hit our targets, and because there's so much action. So that's another thing. We got a lot of flexibility with the time as well. The futures market opens on Sunday, so it's actually trading Sunday nights. Finally, we can start with a real small account. You know, one of the things with equities is you really need a nice bankroll to really have a good return. You know, if you're doing either swing trading or day trading especially, and you know, you can go into margins and stuff, but the futures accounts make it real easy because they're already built in, heavily leveraged, right? And so you can start with a much smaller account. If you're going to trade the full size contract, you can start an account these days with about $3,000. And now with the new micros, which I'm going to talk about because that's the next greatest thing for the new futures trader, is to start with the micros. You can start with an even smaller account. You know, I wouldn't recommend going lower than like $1,000, but you know, hey, if you're just wanting to get started and give it a whirl, and maybe you're a young person, you don't have a lot of money, but you got $1,000, you can get started with the futures, micro futures, and the risk is much lower, the commissions are lower, so it's a great deal to get you in. And that was one of the things, just real quickly, that before they came with the micros, it was very difficult to really break into day trading the futures market in a live account because of the leverage with the full size contract is pretty tough when you know, hit drawdowns or you're going through the learning curve, and it's not easy at first, let's say, and you're taking some hits. That was very prohibitive to make it. You know, a lot of people dropped out and wiped their accounts out, and the new micros make it super easy for anybody to come in, very low risk, small account size, and get through the learning curve. And I'm going to show you how you can just, like later, you can pyramid right up back to the full size contract, low risk. So let's move on here. Now, just to give you an idea, the futures market, I want to show you some price points and things so you get your head around it. A lot of this stuff I'm going to show you, the ATRs and the price distances and stuff have, you know, expanded by 10 times in this volatile market. So But this is what you would generally expect from a normal, calm kind of a market. We get, let's take the ES futures, which represents the S&P 500. By the way, that's going to be the most popular, that is the most popular symbol traded, maybe besides crude oil worldwide. But the ES future is very popular. 1 point is equal to $50. Now the micro, you drop down to the micro, and that's $5. So see, your risk is way lower on that. And we typically, in a regular market, we'd go for like a 1 point scalp type of a target, and we'd maybe take a 4 point scalp target. So you can do the kind of the math there and see what kind of gains you can make just taking a couple scalp trades in the day. Nice finely tuned entries, and you hit your targets. And so the futures market can really be profitable if you're very accurate about what you're doing. So in the stops, you can see 2 to 4 points, but a lot of the strategies that we use, we tighten much tighter stops based on the technicals. But let's take a look at the crude oil, the CL futures. That trades in pennies, and that is $10 a penny. So that takes a lot of experience and firepower to trade that contract. It's not for the faint of heart, basically. And basic normal targets for crude oil on the futures would be like 10 cents or 25 cents. Those are quick scalp moves, and sometimes we can get $1, more than $1 move in a day. And recently we've had like amazingly large ranges in all across all markets. So again, a lot of these numbers are the normal numbers, but we're 10 times above these numbers sometimes. The YM futures, that represents the Dow, and the YM futures does not trade in ticks. It doesn't break down into quarter points or anything. So it just trades straight points. Each 1 point is $5, and because it doesn't have ticks, you kind of can think of it in your head as each point equals a tick. And basically, a tick is just the smallest increment of price movement. So with the ES futures, 1 point breaks down into 4 ticks. It's quarter points. Crude oil, every tick is just a penny. The Dow is just points. So that gives you an idea of what you can pick to trade. And there's the NASDAQ as well. Now, the cool thing is you can trade the futures and on the new micros as well through all of the different trading platforms. So you got TradeStation, you got Sierra Charts, NinjaTrader, Ameritrade, Thinkorswim, and there's many others. There's AMP futures, and so the micros and the regular size futures contracts, you can trade those through any one of these popular trading platforms. And our service basically is a platform independent service. So again, it'll work with any one of these trading platforms. Now here's a graph. I don't know if we can see this too good. It just shows like kind of the commission rates and whatnot. And basically, just to give you an idea, in NinjaTrader, the round trip on a regular size contract is under $4, right? And so think about that. 1 point move is a $50 profit, and your commissions cost $4. So that's a very reasonable ratio there. The micros, the commission rates are like $1, like 70 round trip. Okay, it's not quite as good as, so for instance, the full size contract, the micros are 1/10, but the commissions, they only dropped 1/5. It's still very reasonable because of the the micros are still plenty profitable, and the risk is low, and it gives you the training opportunities, and that ratio is still plenty good for the round trip. All right, now just to get an idea, and I'm kind of rushing here, but we're trying to get through the mechanics of the basic kinds of trades that we do. And now trading the futures can be as simple as taking one contract, taking entry, and picking one target, and having your stop. And in fact, that's the best way to get started, regardless of how you get started, is real simple like that, and just get a feel for how the futures markets move. They move quickly sometimes. You got to be on your game, and you have to practice self-control about your entries. Again, the leverage is so great that you can't just take pot shots and cross your fingers and hope things work. You got to really be precise about how you take your entries. And then you can get more experience, and you get a little bit more complex with the trade management. So here's an example where we'd take an entry, we'd have a wide stop on the full position, let's say, and let's say that this was four contracts, 4 micro contracts. We could pull half off, 2 of them at like a real quick target. And this is an example with the ES futures, by the way, $50 a point. So we could pull off 2 of the contracts at the first target, which we call a delta target, and then another one we could peel off up at another kind of a macro target, 4 points, which is good. In this market, we're going 10, 12, 15, 20 point moves in the ES in this high volatility market. So these are very conservative numbers, but this is what you'd shoot for in a normal market, but still very profitable. And then you could leave the final contract in to become what's called a trend runner, right? So this is how advanced you can get with futures market. And this basic little mechanical methodology that I just showed you here with trade management, you can do variations on the theme on this as well, but this is a real standard type of a thing that we've developed that takes advantage of quick targets, medium targets, and then if price momentum makes big moves, then you're in for the big moves. Here's an example of a trading DOM. The trading DOM is the depth of market, or they call it a price ladder. We use that real intensely in futures trading. A lot of times with swing trading or investing, you don't really look at these because you're just placing your orders in your platforms for the longer term. But in day trading, we're going to be right on what's going on with the price. And here's an example of where we could take a trade and break it into 4 parts and kind of split it apart. This is kind of an example of what I just showed you actually, and where we split it in half, and then we can peel off the other 2 at different targets, and then it all adds up. So that's an example of what we can do. All right, now I've been doing the futures market now probably 10 years, and I've been developing software and strategies and you name it for the markets for 20 years now. And about 5 years ago, I thought, wouldn't it be cool to take some of my signal alerts for the futures market, and instead of trying to create like some kind of an on-chart strategy that fits on your chart, because then I'd have to make, for every platform, I'd have to program a different version. And so I thought I'll make a cool little standalone desktop piece of software. I mean, that was my business career for 20 years was software development. So I whipped out this little piece of software, and it just sat on your desktop, and then alerts would get automatically generated from my auto signaling algos on my server. So that's 5 years ago. We started off like real basic, but very cool. And today we have expanded out now. I mean, we've really advanced our platform, and we've expanded out to multiple symbols, and we have 2 different types of algos that run. And all this is, again, it runs off of a backend server, and so it's all constantly up, and the system runs off of that, and then you receive the alerts right on your desktop platform independent. And so here's an example of our latest version, and we've got the ability, you can go into the settings and you can pick the symbol you want, and you can pick the algo you want. So you've got total control over which signals you want to get, right? And that just creates various windows then you can, page tabs that you can go to get those signals. There's what the software kind of looks like. It's very extensive now, much more advanced. We've got momentum meters, we've got the opening price level for each instrument, the average volume that's flowing through, so you can get an idea if it's really intense market or really dull. There's trend direction meter. And we've got this thing that I developed called the dynamic trigger range. And we play off of that. And what we want to think about is like a channel. And if price is stuck within that channel, we don't do anything, and we play the breakouts. And both of the algos work off this principle now. And the idea of the dynamic trigger range, it's kind of extensive to get into. I don't have time to talk about that, but basically it's a range that's generated, auto-generated by the algos, and it's very precise. When we see price break out, we tend to get good moves. Now, the two algos that we have, and again, what I'm showing you here, folks, is also representative of really the two ways to play the futures market. Being a kind of a super scalper where you're going for the quick impulse moves and you're trying to hit point targets. And basically, if you hit your point targets, you stop. And that might only take 2 or 3 tries. Okay, that's scalping. Scalping can be different, point targets, and you can kind of adapt and move things around. And it's more of it's almost like a game where you're like just trying to get to a certain score, and then you win, you stop for the day. So our power scalper, which generates a dynamic trigger range for the breakouts, is very adaptive. Where if the market starts moving up, you're going to get longs. Market starts moving down, you're going to get shorts. And you're going for the singles, doubles, triples, very quick trades throughout the session, and you can get quite a few during the day. The momentum breakout system is another algo that we have, which is attempts to catch the major trend of the day. And so you can pull back and not have to deal with the minutia of the price movement. We shoot to get entries early on in the session and hold them as long as we can throughout the entire session, and just take advantage of all the big movement of the day. All right, so we're looking for real well-placed positions to catch the overall trend direction early on, and we're trying to get those grand slam home runs. We might get 1 to 2 and sometimes 3 alerts a day, but it's usually on a trending day, it's one trend. We're in and we hang on all day. Now, real quick, the micro scalper, we have a really cool new design. I came up with the concept. I did some research, and I found that we get increased directional movement in the futures market between every 18 and 24 minutes. There's that little pocket, and it's just what my back testing and whatnot came out with. So what we did is we created an algo, and it's based on a 20-minute timer, because the 20 minutes is right in between that 18 and 24 slot, and it generates a new dynamic trigger range for scalping every 20 minutes. And so it's a real great concept. It's almost like the 20-minute binary options or whatever, but the real advantage here is that you can set your clock to the signals, right? You don't have to just sit there all day long and hope something pops up. You get a new dynamic trigger range every 20 minutes. So let's say you complete a trade, and you can look at the timer, you still got 10 minutes left, you can run to the kitchen, you can make a phone call, you can do something, and be back for the next alert. So it's a timed alerts every 20 minutes through the session, and they work great. Basically, if you look over on the left there, you can see the gray dotted vertical line there. That would be when the dynamic trigger range, that horizontal range there, would be generated, and then you can see the breakout that occurred. And we work off a real small time frame charts, less than a minute. You can use a minute chart, you can use a 30-second chart, and we got some real basic patterns that we enter off of. The algo does all the work for you, though, because it figures out exactly the breakout points, and then all we do is wait for the price to break out, look for our little patterns, and then we're in. Here's an example of a short. You can see that the dynamic trigger range was generated, and then price started breaking down, and we get a lot of the normal patterns too. We get flag patterns and whatnot. Here's an example where a dull market, we've got the dynamic trigger range, and we only poked out a little bit here and there, and these do not trigger our entry rules. So basically, this helps also keep you out of a dull market. Now, we just recently had this huge, market meltdown, as everybody knows, 1,000-point down days in the Dow, and like here's an example of the power scalper dynamic trigger range on the NASDAQ, 80 points in just like a couple minutes on the breakdown. See, and this is a recent slide from our big market meltdown. Now, real quick, we go to the power target system, and again, this will take advantage of the concept of trading the overall trend of the day. And what it does is it creates, early on in the price session, it creates a little range, and then it generates price barrier alerts. We also get dynamic targets and an initial protective stop and a trailing stop and parabolic stops. Now, the way it's designed to work is to get you in early on after the open, and then basically try to keep you in throughout the whole session. And there's going to be targets along the way. So it's a real easy on your nerves type of a strategy to follow. We're trying to get that big main move of the session, right? And so here's an example where we got an early morning range, and that gives us a reference point, and then we actually get a trigger line for the entry and a trailing stop. And this is in our help. I don't have time to go through this, but this shows the different market day types. The momentum system is designed to get you into the big long range days and keep you in on the far left there. Also, it can catch movement on the V reversal type days as well. The days on the far right, those narrow range doji bars, we either just don't get any alerts, or that's where we get our stop outs sometimes. And so the power target system, just to visualize it, we get a trade barrier, and then we actually get a confirmation that you need to take the entry. And once it does that, it generates 3 dynamic targets based on the ATRs and the market profile and all that. It's all computed on the back end. And all you need to do is set your limit orders at those target levels. All right, and here's a breakdown. This is something that's in our help. I'll have to skip this here. The cool thing is we did some analyzing of our stats, our back data and whatnot, and we found that just hitting the first target, we're getting an 80% hit rate. Now, I've never been one that likes to brag about anything about, well, yeah, we got 90% win rate, 80% win rate, but this is just hitting the target one, and that's in this market that we've been in. So we've been telling our people, look, the easiest way to trade this crazy market is just take the very first entry and take the very first target and then get out. And so over the last 90 alerts, we've hit 73 times we've hit the first target. And the software, again, gives you all the information you need, and it gives you the price barrier that we're playing to break above, and then your targets. Here's an example where price is moving up. You can see that the orange is the trailing stop. Now, real quick, here is the giveaway. Here's a little trick for you that you can, any way you trade, if you're a swing trader, if you're day trading stocks, even if you're an investor, you can use it. So I'm going to tell you how. But this is a little trick that we use. I designed this years ago to work with scalping. And it's how do you know when to get to break even on a trade? Because one thing you want to do if you're ever doing, aggressive trading is, even with swing trading and investing, you want to get your positions protected when it's feasible so that you don't take a loss, right? The worst thing in the world is to catch a nice big gain and then watch it go all the way back past your entry and take a loss. That's just like a unforgivable sin. So the trick here, and just pretend this is like a 5-minute bar, right? 5-minute chart. The trick is when you get three higher lows above your entry, you can move to break even. That's a statistical bet that the trade, you're going to stay in the trade then. I mean, there are times it's going to knock you out, but this is as soon as you want to do it. One of the reasons that it's so tricky to know when to get to break even is because a lot of times price will, after you take your entry, it'll make an initial push in your favor, but then it'll come back right back to your entry. And traders call that the kiss goodbye. But then it takes off again in your favor. So if you go to break even too quickly, you literally, can be knocked out of the trade, and it immediately turns and goes in your favor, right? So it's very important to have good timing. So this is a little timing technique to know when to go to break even. So if you're a day trader and you're trading on a 1-minute chart, 5-minute chart, 30-minute chart, you can use this trick. If you're a swing trader, you can use this trick on the daily bars. So you get 3 daily lows that are higher than your entry, you consider going to break even. If you're an investor, 3 weeks, if you take a position, or a position trader, let's say if you're an investor, you could go all the way up to months if you wanted to. But this is a kind of a universal trick. It's great. Another little secret is that in any kind of trading, but in futures trading, a really great little methodology is we don't have to trade more to get bigger profits. All we do is keep doing the same thing we're doing and increase the position sizes very methodically. So it's very easy to start off with 2 micro contracts, very low risk, anybody can do it. And over time, every 2 weeks, every month, you scale up to the next level. And before you know it, 10 contracts in the micro, you're at the normal size contract. So the micros are a great stepping stone to get you into the full size contract. So I recommend anybody that comes into this, you start with the micros, keep it super easy on your nerves. Now, in our service, you get the desktop alert software, the Power Emini desktop alert software, and then we have an entire back-end knowledge base now with lots of videos and trainings we've done and documentation pages. And so literally our service is $99 a month. You can come in for $99, get started, no huge upfront investments or contracts or anything like that. And Bill, my partner, will help get you set up with a platform to use. So you can literally sign up, get a free demo platform with live data, get our software installed, start watching the videos on your own, and you're in the futures game. You can pop over to our webpage, poweremini.com. We've got lots of blog posts in there that talk a lot more about the futures market. There's a way to contact us. You can submit your name and email. You'll get on our mailing list. You'll get all the future videos and stuff we put out. And great place to just head over if you want to learn more. And that's it.